Hey everyone, this is Kirk here again at optionalpha.com, where we show you how to make smarter trades. And in tonight's video update, I want to go over all of the opening trades that we had for today, Wednesday, April 11th. So today we got into a couple trades, a new opening earnings trade in BBBY, and then also two additional trades in IYR and FXI, which is another iron condor. So I actually want to go over the earnings trade in BBBY first, because I think it's a pretty interesting trade and one that we actually had pre-talked about with some of our premium members on the weekly strategy call that we had earlier this week. So this is one that was definitely on our radar. There was pretty much no doubt that we were going to get into this, and I really like the pricing that we got on this trade as well, and I'll kind of show you how I got there. So with this trade, again, we traded the weekly options, and they were the April 2s, and you'll notice that every time that we do a weekly option, the weekly option tag or code is right next to it. And the April 2 means that it's the April contracts, the second weekly contracts, or the second Friday contract. So there's a video tutorial inside of the membership area if you are unfamiliar with how these weekly tags work. It goes over everything step by step. But again, these April 2s means the second Friday of April is when they expire. So that would be this week on the 10th. For this strangle in BBBY, we did the 81 calls and the 72 puts for a total credit of 112. So a nice premium that we took. And again, that $112 moves our break-even point out another $1 plus on either end. When we actually look at the chart here of Bed Bath & Beyond, you can see the stock has been a long time earnings crush kind of reliable security, right? So like every time that the stock has earnings, we see that huge drop in implied volatility, and it's usually preceded by a pretty big move up in implied volatility as well. And so what we're expecting here is that we're going to see about the same thing, and I'm sure we will tomorrow. As soon as the stock opened, it already announced earnings after hours and has already made a little bit of a move, but the stock ended today about $77. Now, when we actually get into the trade tab, what's important here is that you have to look at the measured or expected move. So inside Thinkorswim, they have this little area called MMM. And today, the measured or expected move that the market was expecting was actually around 370. So it's gone down just a little bit right before the close to about 339. But it was actually a little bit higher than that at about 370. So what this was saying was that the market was expecting after earnings for BBBY to make a move of about $4 in either direction. So I'm just kind of rounding up here, just giving ourselves a little bit of cushion on either end. Now, of course, we're always going to trade the frontmost weekly contracts, and these are the April weeklies, only 2 days left. These have all the volatility and time decay juice that's in them. And since the stock closed at about 77.5, we wanted to go outside of that expected range, which was about $4. We ended up going a little bit further than that on each end because the markets were really liquid, very wide, great liquidity. You can see there's a number of contracts that were traded all in that same region. So on the put side, we went down to 72, which was more than $5 below the market, so well outside the expected range. And on the call side, we went up to 81, again, well outside of that expected range. Lots of volume and liquidity for the 81s, which made it really easy to get into and obviously should be pretty easy to get out of. Now, the stock is trading after hours at just about 75 or so. So it's already made its move. It's already announced earnings, and it's definitely moved inside of our expected range. So unless anything crazy happens between today or tonight and tomorrow morning when the stock opens, then this will give us an opportunity to close this thing out at a pretty healthy profit for a one-day trade. So really good trade in BBBY. You could have obviously made an iron condor out of this if you can't trade the strangle, in which case you would have wanted to buy the 71.5 or 71 puts. So you're going to spend a little bit of money to buy protection on either end. Again, on the call side, you could have bought the 81.5 or the 82 puts, and you would have taken in less credit than we took in at 112, but you definitely could have still made some money on this trade and did the iron condor instead. So the next trade that we got into today is IRY. It is a ETF that tracks real estate. Pretty interesting because it has really high implied volatility right now and fairly good liquidity. Now, we did trade two of the vertical May 82-84 call spreads. So we sold the 82s, bought the 84s, again, sold the 82s, bought the 84s, took in a 33-cent credit. Pricing and liquidity was pretty good for IRY. And we'll just take a look here at the chart. You can see we're just playing this directionally bearish just because of what we've seen over the last month or so. just the fact that the stock is really topped out. It's made a number of attempts to rally higher and just keeps getting pushed down every single time that it does. So we're just playing it a little bit directionally down, but implied volatility is still over that 50th percentile, so it's definitely a good time to sell implied volatility. The one thing that I did want to just bring to your attention, when we look at the actual trade grid and the trade pricing for this thing, and so let me just go to the May contracts. The reason that we actually did the 82s and 84s was because the 84s and 82s had most of the volume and open interest for that particular day, or for today, so for this particular day. We could have definitely done the 83s, but you see that the 83s just had a little bit less volume and liquidity. And so for our case, we just wanted to, we had a little bit more capital to use, so we could definitely use a little bit more capital in this trade. But we also wanted to go where volume and liquidity was. And so you can see that both the 82s and the 84s had just a little bit more active pools of traders, and that just was maybe a little factor in doing this. Not to say it's always the factor in doing this, but for our kind of pricing that we wanted to see and just how much we wanted to get into, it was just made sense to go to where the liquidity was. So that's our trade. We'll definitely leave that one on and try to let it ride out most of the expiration cycle. Now, we also got into a very massive and high credit FXI iron butterfly. And the reason that we did this was because FXI made a huge move higher today, and probably a trade that caught most people off guard because it made such a big gap higher. In fact, I know a lot of traders that I've seen online were closing out positions and closing out their short positions in FXI because it made a huge move higher. Now, again, we traded the iron butterfly, so we did the 49.54 call spread and the 49.44 put spread. So you'll notice that each of these strikes is $5 wide. So we did a $5 wide spread on each side of the market, but our short strikes were exactly the same at 49. So you can think of it as a very big butterfly, or you can think of it as a straddle right over the market at 49 with buying the wings on either end or buying protection. So we took in a pretty nice credit of about 290. That gives us a very wide range to make some money, and hopefully we see implied volatility start to head lower fairly soon in FXI. But here's the chart here, and you can see obviously the huge move that FXI had. Now we still have the put spread below the market at 42.40. That thing is really profitable, but you'll notice as the stock has rallied, implied volatility has gone up through the roof. And so this is a really good case study to point to the fact that every time that a stock rallies doesn't necessarily mean that implied volatility is going to drop. As far and as fast as this thing has moved, you'll notice that implied volatility is now in the 94th percentile. So it's extremely high right now, which means that option selling is exactly what we need to be doing. Now, we could have done a straddle on this, but given the fact that it's gapped so much, I don't know what's going to happen tomorrow. It could gap much higher, could gap much lower, could stay flat. I didn't want to do a straddle with kind of undefined risk on each side. So again, we did decide to go with the iron butterfly. And that gives us those two positions that are directly right over the market. So you can see our two positions that are short are the 49 calls and the 49 puts right over the market, or as close to wherever the market is as possible. And then we went out about $5 on either end and bought protection on either end. So this gives us a risk-defined trade. And here's what that profit and loss diagram looks like for FXI. Let me just get off the other portion of it here. So you can see very neutral, very wide kind of iron condor butterfly looking profit and loss diagram. And ideally what we're looking for here is just a very quick drop in implied volatility, maybe the stock kind of settling down over the next 2 weeks or so, and that should give us an opportunity to take a pretty quick profit. Now, we're not going to hold on to this thing all the way to the end hoping to make $290. We'll probably look to take this thing off at about $75 to $100 or so as far as a potential profit. Okay, so risk-wise, we don't want to hold this thing all the way through the expiration cycle. As always, I hope you guys enjoy these videos. If you have any comments or questions, please add them right below. If you're watching this video somewhere else out there online or on YouTube, you just have to understand that you're getting this video about 15 to 20 days after it's sent out to our members. So if you want real-time alerts and this video that goes along with all of our daily trading alerts, you've got to sign up for a membership at optionalpha.com. Until next time, happy trading.